Good afternoon. We are delighted to welcome a regular participant to Unlock the Stock today, and that is Tharisa. This platform was created for retail investors to connect with corporate management and to get a better understanding of them and their companies. We are joined today by Tharisa's CEO, Phoevos Parolis, and Ilya Gralik, the Head of Investor Relations and Communications. Unlock the Stock is only possible with our technology partner, Lumi Global. You can visit their website at lumiglobal.com to discover more about their various online AGM and investor presentation solutions. Before we start, there are a few housekeeping notes. The company presentation will be followed by a Q&A. As usual, the Q&A will be hosted by the Finance Ghost and Mark Tobin of Coffee Microcaps. You can post your questions by typing them into the chat box, which is at the bottom of your screen. The event is being recorded and will be available on our YouTube channel soon. You will also see an email address before we begin the Q&A session. Please take note of it if you want to be added to Tharisa's investor distribution list. Stephen, I am ready for you to share Tharisa's corporate video, and then Phoevos, you can take us through the presentation when the video is done. Thank you.
The world depends on the responsible use of its natural resources. At Tharisa, we are redefining how those resources are unlocked through an integrated multi-commodity approach that delivers multi-generational value. Safety is our license to operate. It's our core value. It's embedded in every aspect of our business, from planning and design to execution on the ground, because our people are at the heart of everything we do. Our core product model enables the simultaneous extraction of platinum group metals and chrome concentrates, maximizing resource efficiency, minimizing environmental impact, innovating with purpose. As a low-cost open-pit operation with integrated processing, we extract full utility across the value chain, consistently and at scale. This disciplined long-life approach defines the Tharisa investment case. A long-life asset base, disciplined capital allocation, and a cash-generative business model designed to perform across cycles. Our underground transition marks a significant step forward, extending our life of mine by more than 60 years and strengthening long-term value for our stakeholders. It's an investment not only in our business, but in empowering the future of the South African economy and the communities in which we operate. As part of our unwavering commitment to South Africa's future, we have pledged 10.2 billion rand to drive local growth, industrial capacity, and inclusive development. Sustainability at Tharisa is not an add-on. It's fully embedded in how we operate. From responsible water and land stewardship to meaningful, impactful community engagement, we are committed to creating shared long-term value. Our vision extends beyond South Africa. Karo Platinum is a next-generation PGM mine under construction in Zimbabwe, advancing our strategy to build a globally relevant, integrated resource group. Through downstream beneficiation and innovation, we are unlocking new opportunities across our resource base, extending value beyond extraction and into application, from infrastructure development to decarbonisation to energy storage. Our purpose is clear: redefining resources, innovating with purpose, empowering futures. Tharisa, an integrated resource group, future-focused and committed to playing a pivotal role in the global energy transition and decarbonisation journey, delivering value with lasting intent.
Good afternoon, everyone, and thank you for welcoming me back to Unlock the Stock. An exciting time in our journey, and if you give me a moment, I will share the presentation for today, and I can run through the latest update. So yes, it's a pleasure to be here with you today, and we really kick off the session after that great video that our team put together, highlighting the three pillars of why do we wake up every day, why do we do what we do, and it's really driven by the passion to do things differently. And with that, we redefine resources differently in the sense that we approach them, and the Tharisa mine is a point in case where we co-produce platinum group metals and chrome concentrate from the middle group reef horizon, which historically was only mined for chrome and not PGMs. And with that redefinition, we look at optimizing and extracting maximum value from every cube of rock that we mine. And what enables that is innovation and doing it with a purpose, challenging convention and using creative ways to unlock value. And it's all about that maximum return on that investment in mining that single cube of rock. And the impact that we have is meaningful, and it allows us to plan for future generations, to generate sustainable employment across multi-generations. And it can only be done by unlocking these multi-generational assets that we have in our portfolio. So touching on our portfolio and taking a helicopter view of who we are, really we're underpinned by the Tharisa mine, which is housed in Tharisa Minerals, which has the benefit now of us going underground and unlocking that 60 years of additional life. We've been mining profitably and successfully with our open pit operations, and as we transition, we unlock that multi-generational asset. This year's guidance, we've just come out of our half-year guidance reporting, which I'll touch on, but our full-year guidance is to produce 145 to 165,000 ounces of platinum group metals and between 1.5 and 1.65 million tons of chrome concentrates. I think what's unique about the middle group reef horizon, and particularly what we produce at the Tharisa mine, is what we refer to as the pearl split, the constituent parts of our platinum group metal basket. So we have around 53% platinum, 15.9% palladium, but a very high rhodium content at 10.5%, possibly the highest in the Bushveld complex, very low gold, meaningful ruthenium at 16%, and 4.5% iridium. And we'll unpack why this is so important when we look to the future and future demand drivers. And then when we look to the future, we more than double our PGM output with the commissioning and mining of the Karo Platinum project, which is a tier 1 resource and is geared to produce 226,000 ounces. It has a complementary pearl split or PGM constituency, more balanced platinum and palladium, lower rhodium content, but a very high gold content of 8.6%. So a very nice combination across the two assets. Importantly, these are long life, multi-generational assets, which we keep reinforcing. And it gives us the conviction to invest through the commodity cycles. You heard in the video that safety is a core value. What do we mean by that? We mean it's entrenched in every decision we make, and it's at the forefront of every activity that we undertake. We have one of the industry-leading best statistics with an incident frequency rate of 0.03 per 200,000 man-hours worked. It is not zero. We're only happy when we're achieving a zero harm environment, and that I'm proud to report on at Karo Platinum. Under very sort of intense construction activities, we've managed to achieve that. I think importantly as well, our mining at the Tharisa mine, it's a very big operation. We move 60 million tons of waste and reef every year. And over the last 3-year period, you can see we've had an injury-free incident rate, which is really pleasing to report on. Again, something that you never arrive at your destination. It's constant work and constant diligence that's required. So when we look at our half-year results, just to refresh our shareholders and potential investors on the call, we had a very strong half year, and really this was underpinned by an 85% increase in the platinum group basket price close to $2,600 an ounce, and an improvement in the chrome concentrate price of $284, just above 10% improvement. And that really generated a very strong financial performance. Revenue close to $360 million, EBITDA of $104.3 million, a big jump from the comparable period. Profit before tax almost $70 million, and importantly, very cash generative from the operations at $96.4 million. We ended the period in a net cash positive position with $54 million, which obviously is very pleasing as we go into a big capital spend with underground and the Karo development. This all resulting in an EPS of 15.8 cents, and that's on the back of, I would say, good PGM production at 73.1 thousand ounces, up considerably from the prior period, the prior 6 months, but still trailing a little bit behind our run rate for the year, and pretty much chrome production at 753,000 tons, in line with the prior period. We are guiding that the second half will be better and stronger in terms of output, and that's really due to weather-related incidents that we experienced in the first half of the year. I think most of our shareholders are very pleased with the interim dividend payout of 2.5 US cents, and that's in excess of our payout ratio of 15% of net profit after tax. And typically at the interim period, we only distribute 40% of that. So nice to see board and executive committed to that capital discipline of returning value to shareholders. So when we talk about profitability, we always look at our gross profit margin. You can see year on year pretty consistent at 30.3%, healthy margins on the back of those PGM basket prices, and in fairness to the team on mine, very good cost control for the 6 months period. This is most probably the most representative graph that we have, which really stacks up the EBITDA over the 6-month period, and it compares it to the first half of the prior financial year 2025, where we came in at $43.8 million compared to the 104.3, a significant boost in those earnings. And really the key feature here are the PGM volumes increase of about 17%, but the 85% increase in PGM prices really was the contributor. I think what took away from our earnings were chrome volumes, mining costs slightly up, and then mining commodities talks about the third-party run-of-mine that we bring in to supplement our own mining feedstocks. Processing costs marginally higher, but then inventories you can see are offset, and that really talks to the chrome volume equation where we had higher production but lower sales, and then your general and other contributions to the EBITDA. But all in all, a very strong cash generative half. When we look at the dividend, I think we're always pleased to be able to maintain this discipline of being able to pay dividends at the interim and the full year period. I think we only paused during COVID because of the uncertainty at that period in time. But other than that, over the last 5 years, you can see we've paid in excess of our stated policy of 15% of net profit after tax. And in total, I think we've returned over $115 million to shareholders in the form of dividends, which is embedded in our capital discipline. So I think closer to home, when we look at our redefining of resources, we really are excited about the transition to underground. But before we get into that, let's talk about what the future looks like for platinum group metals. We all know that PGMs, platinum, palladium, and rhodium have been critical in decarbonising tailpipe emissions from internal combustion engines, and really have been unbelievable in their quality and application in terms of autocatalytic converters. But when we look to the future and we look at the AI revolution and future applications of these very precious and unique metals, we see that artificial intelligence, hydrogen economy, defense spending, health, and the energy transition are really the new demand drivers and green shoots of demand, while battery electric vehicles have underperformed and certainly have given a longer lease of life to the internal combustion engine, whether it be hybrid vehicles or whether it be pure internal combustion engines. We look to the future and we say that we've come out of 5 years of deficits in terms of the major PGMs, and with increased demands, whether it be hard disks for data storage in data centers, which are really drivers for ruthenium and platinum, whether it's inside semiconductor chip manufacturing for AI, ultra high, ultra fast processing capacity, less than 10 nanometer nanoparticle deposition, very small deposition, but you apply this over millions of processing chips, you can see increased demand, particularly around platinum and ruthenium for connectors. And then we look at electrolyzers, which really we've had multiple false starts around the hydrogen economy. We've seen big developments in China with closed loop systems where a fabricator or an industrial user generates hydrogen on site, uses it for mining or for transport logistics, and has a refueling closed loop system. We're now starting to see sustainable aviation fuels being deployed at airports around the world through electrolysis of water into hydrogen and oxygen. And you can see here a 9x scale up in electrolysis to 4.9 gigawatts in the EU, which is rather remarkable, and boosting platinum potentially by 875,000 ounces. And then obviously defense spending. We all know we're in the middle of a major conflict in the Middle East, and the NATO pledge of 5%. Again, very sort of critical, unique applications around missile cones, sensing, sensors around radars and plating, fighter jet glass manufacturing containing rhodium, and microprocessing, very sort of opaque markets, but the industry is starting to delve deeper into it to understand where and how these new applications or uses can drive platinum group metal demands. We know about platinum in cancer care, cisplatin, and medical devices, and we see as the aging population grows, more application, more requirement for these medical applications. And then fiberglass is a really interesting area where the high precision tooling requires very high temperatures, and platinum and rhodium play a vital role in those tools, or bushings as we call it, for extrusion of fiberglass. And then you look at wind and turbines made out of fiberglass, and then in particular the e-glass, which is required in terms of optical networks and servers. So all in all, we're seeing big demand drivers coming out of future applications. So we're seeing AI in general and technology-driven demand could boost PGM demand by 3.1 million ounces. And you'll see this narrative coming out. And this is analysis that comes out of various research houses. And we just thought it's fascinating for us, and we wanted to share it with the audience today, just to illustrate how the world is changing and how important platinum group metals are. When you start looking at capacitors, hard disk storage, the crystals in the crucibles that end up manufacturing the high-end glass substrates for microprocessors, platinum cured silicon in robotic hands for the sensitivity and the tactile feedback. And then we know about memory and servers, and the miniaturization of everything means more specialist, more precise application of raw materials. But the story doesn't end there, because when we look at chrome, which is really the backbone of our business, it ends up becoming a strategic build-out. And as the slide depicts, it's a strategic metal of the build-out. And we start looking at chrome in its essence as being the commodity that makes stainless steel stainless and is irreplaceable. And so that base load of demand for the uses that we know today, whether it be structural, food and beverage, hospital, cutlery, crockery, white goods, washing machines, air conditioners, heat pumps. That remains as the baseload demand. But new applications, when we start looking at infrastructure, we start looking at data centers in terms of alloys used in casings, coolings, piping, water piping systems in Tokyo have been spec'd to stainless steel. So we start getting quite excited about the potential of future demand. And we'll talk about our own internally generated demand through long duration energy storage with chrome iron redox flow batteries, which potentially provide a fantastic energy storage solution. And then you can see the super alloys in aerospace and in military applications, also very, very critical and key. I think the key takeaway from this slide here is that at a 3.5% CAGR, which is pretty conservative when we look at what chrome and stainless steel has been growing at over the last decade, you need an additional 1.8 million tons per annum of chrome concentrate. So you need another Tharisa mine to supply this increased demand. So we always talk about deficits in platinum group metals. We wouldn't be surprised that in the medium term, we don't start seeing physical deficits in terms of the chrome sector. So coming back to the Tharisa mine, which is really the engine, the productive engine that's enabled us to grow this business and to pursue the vision that we have in terms of these multi-generational projects and assets. It's a large-scale resource, over 5,475 hectares, with 655 million tons of resource, with 31 million ounces of PGMs and 130.9 million tons of chrome. And this really gives us that conviction and belief to invest in the future and transition to underground with our reserves at over 109 million tons, which gives us well in excess of 10 years life certainty in the first phase of our underground. I think now we're very excited about where we are in the technology evolution. And what we wanted to share with you is building a new mine now gives us access to technologies that allow us, one, to do things smarter, better, but also more efficiently and importantly, safely, where we can minimize machine-human interface. We can access the blasted zones immediately after a blast, which typically you would require 2 hours of settling for the hanging wall, footwall structural integrity to be identified, as well as the fumes from the blast to be ventilated. And so, Stephen, if you could share a short little video now with the audience of Spot, our Boston Dynamics dog, and then I'll talk to it while when we get there. That's great. Thanks, Stephen, for sharing that. So you'll see here from the image on the screen right now that we've started with our underground development. It's a 3-portal development on 2 of the reef horizons, the MG2 and MG4 reef horizons. It's a very wide cut, 4.5 to 5.5 meters, amenable to bulk mining, which allows us to transition from the open pit over the next 8 years to a fully underground operation. You'll see here the first portal on the right-hand side is starting to get the sets installed, and the development continues on a 3-barrel progression. And as you can see from the left-hand schematic, it is done sequentially and in different stages between portal 1, 2, and 3. So this allows us the flexibility to continue mining in the open pit up until 2033 as we transition and build up our inventories from the underground operation. So you'll see here, these are the LiDAR scans that come from that technology that we were talking about. So it's very technical, but it's just to show you that this comes instantly to the cloud. Historically, this would take days and it would take weeks to interpret, and you'd schedule your planning on a weekly basis, whereas now this is live data that is uploaded to a cloud system and mapped instantly. And so when we're doing virtual training through simulators, the actual simulators and the equipment we use is in situ in a live environment. So it provides a whole host of benefits from a skills transfer perspective, from a safety perspective. We can understand where the structural issues are within the development, so you can put the appropriate supports in. So it really fast tracks the time to an operating phase, allows us to make the correct decisions on an informed basis. So really exciting times to be networking a new mine, to deploy artificial intelligence and the latest technologies that are evolving at such a rapid pace that allows us to unlock that potential. So moving on to Karo Platinum, this is our next tier 1 resource, and you can see here that it's under construction, and we've invested considerable capital to date. We've put $241 million of our funding into the Karo Platinum project, and really this was in a period of time where PGM prices were suppressed. There was little conviction around investment in PGM projects, let alone sustaining capex in existing projects. So we certainly believe in investing through the cycle. And what do we have here is a vast resource, but we're starting in a phased, measured approach, like we've done at the Tharisa mine, where we start with a 10-year open pit life, and it's scalable to at least 50 years thereafter underground. It's a 25 or close to 24,000 hectare resource, and some 96 million ounces having been declared historically over this resource. Our first phase from the open pit is scheduled to produce 226,000 ounces of PGM products, so more than doubling our output from Tharisa, allowing us then to transition to underground, where we are planning to ramp up production to 360,000 ounces. Important to note, we have very lucrative copper, nickel, and cobalt byproducts on the Great Dyke of Zimbabwe. And talking about impact and empowering futures, this project will employ 1,200 people directly and have around 2,800 permanent contractors on site. So meaningful job creation in a country with very low employment and job opportunities. See an aerial view there of the trial open pit mining as we transition to this overview of the project. And you'll see from that schematic in the bottom right-hand corner, we're focusing our first phase in the southeastern portion of our concession. Very compact design with the open pit starting at KPE Southeast. We're getting our water secured from the upgrade of the Chirandazi Dam. Power has been secured from the Selous substation, and we're busy installing those power lines as we speak. And the substation, concentrator, and mining contractor with tailing storage facility, all located optimally for our first phase. We have also scheduled the development of a 30 megawatt solar plant to offset our carbon footprint, but also to reduce our electricity costs in country. We appointed a tier 1 mining contractor on site, and that has really been one of the key de-risking appointments, because when we looked at the long lead items and the long lead path to first ore and mill, we realized that mobilizing and getting a mining contractor of this scale for these volumes would take time. So we're very pleased that EPSA, a Spanish mining contractor, have mobilized and have started with pre-stripping. But I think if we take a step back, we have a high degree of confidence in the resource. We've done over 60 kilometers of exploration drilling, and we've recently completed 26 kilometers of underground drilling, unlocking that 50-year additional underground potential. We have a new competent persons report that's been released, sort of outlining the resource and reserve. The mine design has been complete, and as mentioned, is being executed in a measured, systematic way, with waste stripping being undertaken as we speak. In terms of the processing, it's a well-known ore body. The Great Dyke of Zimbabwe, Mimosa, Unki, and Zimplats operate some of their best cost per ounce operations in their portfolios on the Great Dyke in Zimbabwe. So we have a high degree of confidence in terms of the recoverability of the platinum group metals. In terms of design and engineering, that's complete. The earthworks are complete. We're 80% through with civil construction. Procurement of long lead items, the bulk equipment, 70% complete. Fabrication is the last component that really needs the push at 37% completion. And as mentioned, water and power are secured. So moving on now to innovation and innovating with purpose. The way we've approached the resources has really unlocked value, but taking the raw materials and the commodities that we mine, and we spent a bit of time unpacking the future applications. And we've been working on this Redox One battery technology for the last 5 years, and taking the chrome and the iron that we produce at the Tharisa mine, producing electrolyte for energy storage. And we're very pleased that we've made great progress, and we've done the factory acceptance testing of our megawatt class scale batteries, and those will be deployed in the middle of this year to customers. The Tharisa mine will be the first customer where we'll have the demonstration scale unit being charged from our facilities on site, offices and conferencing facilities, where we can demonstrate the charging and discharging efficiency of the system. And from that point on, we're rolling 2 other units out in Europe and most probably the Middle East. And then we will start scaling up in terms of the deployment of this long energy duration storage. Again, this is unique in its application. It's meant for grid scale, large 100 megawatt to gigawatt scale storage solutions. It is a long life energy storage solution, at least 20 years longevity, and it can operate in harsh inclement weather environments. So it is really well suited for remote renewable energy application for energy storage. The beauty of flow batteries is that your power and your energy density, or your longevity or energy storage, are decoupled. So the more hours of storage you need, the more electrolyte you put, the more energy you need, the more stacks you put. So it's a highly bespoke, customized solution that can be suited for customers' needs. We also, in talking about technology, spend a lot of time looking at platinum group metal refining, as well as our chrome alloy products, which are advancing and progressing well. And we have a number of projects underway that unlock those potentials as we speak. We're very passionate about contributing and giving back to our communities and to the societies, not only through employment, but through learnership opportunities, education, and through just basic services and upliftment of communities. And you saw from that previous slide, a school in Zimbabwe had no running water, nor a ceiling or roof for their school. And through collaboration with our contractors, we were able to upgrade those facilities and provide very basic services, but meaningful and life-changing to these young children that are looking to educate themselves. Just a recap from our full year numbers, and this talks to the impact of what we do. We employ across the group over 4,400 people, with a multiplier effect in Africa. That's a meaningful contribution to society and the economy. We have at least 27% female employees represented in our organization. We've provided scholarships, bursaries to 35 learners. And in terms of the economic contribution, the numbers speak for themselves. Significant global taxes and indirect taxes, currency inflows into South Africa and into the future into Zimbabwe as well. In terms, a very interesting number is the amount spent on BE, historically disadvantaged people, and triple BE compliant procurement, over $330 million. So a significant boost to those small, medium enterprises. So looking forward into our Vision 2030, and what do we mean when we talk about our Vision 2030? We want to deliver on these two big expansion projects, which is the Tharisa Underground and the Karo Platinum Open Pit Phase 1, and commercialize the downstream technology solutions that we have. But importantly, the investment case for the audience today. What do we have underpinning our business? We have ultra long life resources which require strategic, long duration capital decisions. It's underpinned by technology and research and development to unlock additional value and to support this multi-general growth. You have an experienced management team with a strong track record of delivery. We have these long life assets. And when we look forward, Tharisa will become a top 7 global PGM producer and a top 4 chrome producer by 2029. Karo really is a game changer for us. It moves us from a single asset to multi-asset, multi-jurisdiction, as well as more than doubling our PGM output, and in turn, having a big boost to our earnings and potential and free cash flow. Our integrated model with marketing and logistics unlocks value, gives us access to the end users. We manage our relationships very closely with the end customers and get close to those new applications that we spoke about, and look at driving development and use for these commodities, these very unique and precious commodities. I think importantly, we've been consistent in terms of our strategy, in terms of our capital discipline. Our 3 pillars of capital discipline: investing in our business through stay in business. Critical if you're in a capital intensive industry, because it will come back to bite you. And we started to see that with the supply side, lack of investment in platinum group metals. Secondly, returning capital to our shareholders in the form of dividends. And thirdly, investing in growth and in the future. And we've been consistent with that. We are going into a deeper CapEx cycle now, but with transformational growth in our business. And then obviously supporting society, the economies that we operate in. And what does this really mean at the end of the day is that we have a business model that's proven its resilience through the cyclicality of commodity cycles. And we always say the only quartile that you should be in is in the lowest cost quartile. And unfortunately, not everybody can be in that position. But releasing our half-year results for the Tharisa mine, taking the chrome credits, you'll see that the Tharisa mine is, according to this analysis, the lowest cost producer at $268 per ounce post chrome credits. And that's from our half-year results. Karo is also forecast to be in the lowest cost quartile, with an estimated cost, including capex, of 14,000 Rand per ounce. These are Rand based, so excuse me for mixing dollars and rands in terms of the comparison here. We report in dollars normally. But then if you look at the valuation comparison, you can see the compelling re-rate potential in terms of the deep value that exists in Tharisa. And you can look at it across the board, whether it's EV, EBITDA, price to earnings. And for a small business, we do compete on dividend yield, even though it's not our primary driver, but it is important to us. So with that, I'd like to hand over now to Mark and the Finance Ghost for the Q&A section. Thank you very much.
Thank you, and thanks for coming back and joining us once again, everyone from the Tharisa team who's on the call with us and everyone who's joined us today. I just want to start maybe kind of where we've finished off there, Phoebus, is you spoke about the dividend yield, and I think it's interesting just to step back and look at how Tharisa has historically use that to grow the business while at the same time still being able to, reward shareholders along the way through buybacks and dividends. It's not kind of something you would typically see in a lot of miners who are, scaling up a big project like Karo and, Tharisa back in the day. So maybe just talk to us about how you think about, rewarding shareholders for not only putting capital on the line, but that they get, something along the way as the process kind of goes along, and it's not, hanging out there for like 5 years or 7 years until we actually hit first production?
Sure. Yeah, no, I think it's a great question. It's one we get all the time. And I think if you just rewind and you look at our capital journey, we've really used debt to grow this business. We've raised over 10 billion rands worth of debt over the last 15 years. We've repaid 7.5 billion rand of debt. So if you look at that, it's half 500 million rand a year, and that just talks to the cash generation of the business. So in this environment now that we're going into a steeper debt indebtedness, we're comfortable with the underlying fundamentals of our business, that we can, one, service the debt, and two, with the cash flows that will be coming on stream from Karo, which are significant, and obviously longer dated, sort of 24 months, let's say, till we get to steady state, we're able to manage an increased debt profile and very quickly start reducing that through considerable free cash generation. And we're not being overly optimistic on commodity prices either. We're taking a consensus view, which is pretty conservative compared to even a lower spot price today. So when we look at the capital discipline, we say most of our shareholders haven't necessarily seen the capital appreciation that some of our peers have had. And we said, okay, well, we need to reward and recognize our loyal shareholders that have stood by us. And the best mechanism to do that is through the capital discipline that I've spoken about. And even though it's a conservative dividend policy, it's consistent. And we've been consistent over the last 12 years in applying that policy. So as the company is more profitable, so the actual payout or the absolute number increases, but the percentage remains pretty firm. So we're pretty firm on that policy. Obviously, the world is volatile and there are uncertainties out there. So I'd like to believe we can maintain it, but in the event that there are stresses and strains and requirements elsewhere, we may relook at it. But it's certainly not in our discussions currently.
Hi, Phoebos. Thanks so much for your time again today. Please excuse my voice. I have a cold and I'm not sitting in my normal spot for this, so it's a bit of a comedy of errors, but we persevere. My first question is more around some of the practical metrics that come through when we see your results. I always think, as someone who just reads your results, not necessarily a mining expert, it's always just cool to dig into some of this stuff. And I think specifically that concept around buying run of mine ore versus relying on mined reef. So, buying in stuff to process versus the stuff you can mine yourself, essentially, simplistically, the cost implications thereof, how that relates to then your milled reef as a metric. I think just to help people understand more as they read your numbers and do their research.
Yeah, thanks for the question. So our priority is to maintain the throughput in our processing plants. We have very efficient plants that recover PGMs and chrome at an optimal throughput rate. So as we transition through various phases, there's disruption due to inclement weather. We all, those of us that live in Johannesburg, experience severe lightning, severe weather in the first quarter of this year and towards the end of last year. It impacts our ability to mine our own reef, as we call it. So we've, over the last couple of years, built relationships where we can source run-of-mine material, varying grades, varying quality from regional suppliers. And while we thought it was a temporary measure a couple of years ago, we now have the structures and the ability to deliver, receive, and process that material. So yes, it gives us that flexibility to blend and bring in material. It comes at different cost structures, and we do report on it separately, and that comes in under mining commodities. And typically we try and maintain it as close to our own mining cost, but invariably you've got a logistics cost that comes in, and people, depending on the commodity price, pricing the material slightly higher. So as we transition to the underground, I think more importantly, we'll start seeing that external ore diminishing, or the requirement for it, and being supplemented or being replaced by our own underground run of mine that will start building up. Just to remind our listeners and viewers is that we're doing an on-reef development. So as we are progressing those 3 portals, we'll start by July, August this year of mining on reef. So we'll actually be generating a run of mine feedstocks from our mine development, which then will go into the processing plants and be ramped up over a 3-year period. But really, that's the background to the run of mine. And when you look at it from an input cost point of view, it normalizes out with that one line item, which we really focus on, which is the on-mine cash cost per ton mill, because that includes the external ore and it includes our own mined ore. And you'll see year on year, we actually lowered our cost by 8.8% for the half to $51.8 per ton.
And Vias, I just want to touch on Redox One, just given we're getting to the pointy end of a long R&D process with the first I guess commercial unit going on site with you and with with 2 other customers. If we take a bit of a longer view in terms of the commercialization, do you see this as an internal division that you can run and scale up yourself, or should we be thinking we've going to get some initial customers outside of Tharisa on board, some feedback data from a live environment, and then you look to partner or license the IP with a more traditional global energy player who can run with this through their kind of vast customer network?
Sure, it's a great question, and we've debated this internally, and we certainly believe it doesn't necessarily belong or get true recognition under the umbrella of a mining company. So to your sort of outline there, we would look to scale up, get the feedback, get interest, get demand really, because you want to build up an order book, and in parallel build up the fabrication capability, because our prediction is that demand will outstrip supply for the technology, and the biggest challenge we're foreseeing right now is being able to actually fabricate and manufacture enough electrolyte and the actual systems to meet the demand. So at a point in time where we need, let's call it that capital injection, whether it's through partnership or through investment in fabrication, we would look most probably to spin out Redox One into its own entity, whether that entails an IPO in a sort of favorable jurisdiction that's giving wonderful multiples to these types of green energy long duration storage systems, and really plays into the data center backup storage energy thematic, as well as renewable energy players who have shown the most interest for peak shaving and for storage and delivery of power at optimal pricing periods. So yes, the intention at this stage is to build up the business case, build up the demand, and then look at maximizing value for Tharisa shareholders, because ultimately it's a wholly owned subsidiary of Tharisa. So unlocking that value through some spin out or partnership.
Thank you.
I'm going to jump back in here. Maybe just a question around recoveries, as we also just, again, maybe do some jargon busting around some of these terms, etc. So understanding PGM recoveries, chrome recoveries, to what extent that's in your control in terms of the process you run and everything else, the technology versus, the rock that Mother Nature gives you, for want of a better description. I think it just helps people to understand controllables versus uncontrollables in your business.
Yeah, sure. And again, there is an aspect of what's in the ground, Mother Nature, as you say. So we know in situ what the head grades are. And when we talk about head grades, that's the metal content. So chrome content, typically, we're looking to feed around 18.5% chrome into our processing plants, and around 1.5, 1.7 grams per ton platinum group metals. Now, what is in our control is the way in which we mine that run of mine ton or reef ton, and the dilution. And that's the benefit of moving from an open pit mine to an underground mine, is we have a waste parting that we remove in the open pit to get to the reef mining, and then an interburden waste to get to the multiple seams. And so your biggest challenge in an open pit mine is your grade control through dilution. And there are multiple contributing factors to that, but it really boils down to discipline and repeatable performance. In the underground, you're mining on the reef, so you're actually not potentially mining any waste. you're mining clean. So there is a benefit in terms of grade control and consistency that we will forecast going into a fully underground operation. So once you've solved that feed grade, there's a certain amount of metal that goes into the processing plant, and that processing plant then is geared for maximum recovery. And again, through discipline, cleanliness, housekeeping, and management of that plant, you can influence that recovery. So our targets for platinum group metal recoveries are around 80% across all of the metallurgical complexes. And for chrome at the moment, we're averaging around 72%. And with the rollout of our final ultra-fine chrome processing plant in the new financial year, we want to move that chrome recovery from 70% to 80% recovery, which will be quite remarkable in the industry, because it means we're recovering ultra-fine chrome that historically has never been recovered through, again, IP and process technology that we've developed through the Vulcan plant and Vulcan X. There is one other factor to consider. The shallower you are in an ore body, so 0 to 20 meters in the Bushveld complex, you have what's referred to as oxidized or weathered ore, which impacts your platinum group metal recovery. So you'll hear sometimes we've reported that some of the run of mine that we've brought in has been oxidized or weathered and has impacted our platinum group metal recovery. And that's a function of nature, and it's an oxidization of that zone. Whereas the chromite is in oxide form already, so it's not impacted by weathering or oxidization. So that's another nuance to factor in when you're looking at performance quarter to quarter or half year to half year. It really is a blending mix of different reef horizons and different constituent parts, but it starts with the basics of your head grade is the amount of metal you put in, and the amount of metal you recover determines what your production output is. I hope that I've explained that clearly enough.
Yeah, that was great. Thank you.
Sure.
I feel like we've just got a mining engineering 101 or maybe even mini MBA there in that answer. My head was starting to hurt a bit.
Apologies.
But thank you for a very detailed answer. One other thing I did want to touch on, because it just got announced, I don't know if it was earlier this week or last week, you've set up an ADR program now to make it easier for US investors to come onto the register. Last year we saw moving from I think the AIM market onto the main board of the FTSE, and I guess maybe just give a bit of background why you did that and just the benefits for South African investors of doing these things, because I think people might look at you're pretty much a Southern Africa based business now. What is the benefit of these ADR programs and being listed in London, for a South African investor and for the kind of Tharisa valuation?
Yeah, so I think it boils down to that last point. It's around recognizing the value and the value proposition that we have, and by creating demand in the equity story. So as we all have witnessed, the search and the drive for security of critical minerals and the supply of strategic materials has really been at the forefront of a lot of geopolitical issues, conflicts, tariff wars. Picked up over the last 2 years is the interest out of North America in terms of direct investment into enabling projects to provide these critical minerals and raw materials to end-use applications, which we spent some time unpacking in this presentation today, whether it be defense or AI or future-facing energy storage applications. And so we said we normally go on an annual basis to a mining conference in the US, and there's been muted interest over the years in terms of South Africa and Zimbabwe, mainly focused on North America and Latin America and Australian, Canadian mining. And what we saw is a heightened interest in these critical materials. And one shouldn't forget that South Africa and Zimbabwe host 80 to 85% of the world's platinum, rhodium story around critical minerals and the scarcity and the supply side and demand fundamentals that we starting to talk about better as an industry really hopefully creates more demand, interest, and ultimately recognition in the share price through value re-rating of our stock.
I suspect that I'm getting to sneak the last question in here, if that's okay. Let's see where we get with it. And then Mark, do you have one that you want to ask very specifically?
No, you can jump in there. I was going to hand back to Vanessa, but jump in.
Okay, cool. Now let's use the time we've got. So I wanted to ask you around, I mean, we're in an environment now where it's talk around inflation, interest rates going up, not down. Just comments, I guess, around how you're feeling about that environment, where you're at in your journey in the cycle, just as investors kind of understand your positioning, as you deal with inflationary input costs and cost of debt, etc.
Yeah, so I think the first issue is around diesel and fuel prices, and you would have picked up from our on-mine cash costs that diesel accounts for 10.9% of our costs, so not insignificant. And this is pre the invasion and the oil price rally. So it is something that we're very acutely aware of. The first risk was obviously security of supply, making sure we get fuel into our open pit operations so we can continue operations. We de-risk, debottleneck that. The second is managing the costs. So we've been running a number of initiatives through cost-saving additives or fuel additives that reduce consumption per cube of rock mine. We've had some positive results, and we're starting to roll that out. But more importantly, looking at destination schedules of our waste rock material and looking at shorter hauling distances. And basically, our objective is to minimize our diesel consumption by 10%. So on-mine cash cost prudence and management is the key driver at the moment to contain some of that inflationary cost pressure, and the team are mandated and acutely aware of what they need to do to contain some of that pressure. In terms of debt, yes, it is a function of markets. Typically, we have floating rates. We don't fix our rates in terms of our debt facilities, and yes, it would cost us more. But when we look at the life of these assets and the investment duration, we see the debt cycle and inflationary cycle also being cyclical, and it's a function of making sure that we remain in that lowest cost quartile. We are cash generative so that we can finance ourselves through this capital journey that we're on at the moment. And in the event that we do need to prolong or take longer to do things, we always have that flexibility, right? It's within our control how fast or how slow we expedite these things. Personally, I believe in getting into cash flow as soon as possible. So even in a slightly higher debt environment, I would be inclined to push through to that next tier of earnings generation, which comes out of Karo and enhanced underground operations at the Tharisa mine.
Thank you. And thank you to everyone who chose to spend time with us today. And a special thank you, though, to Phoebos and Ilya for making this time to support the platform and to engage with retail investors. You always have a lot of information and projects to share with us, Phoebos. Thank you very much. For those who are interested in our next session, it will be on Thursday, the 25th of June, and that will feature a REIT, which is Octodec. It's a new company being featured on Unlock the Stock. And we look forward to seeing you. So, Phoebos, thank you so much once again. And that is all from my side. Goodbye, everyone.
Bye. Thank you very much.